Mojo Eye Care Specialists. It's a nice question. It's not a difficult question, but it tests whether you have insight how to compile or to get figures out in a non-traditional way. What I want you to do is to prepare the statement of profit or loss of MES for the financial year ended 28 February 2019. Comparative figures are not required. Now, the whole layout of the question is something different from what you've seen in the past. And that makes it a nice question because you have to think a little bit in a different way how to approach the question. But it's not difficult. Mojo Eye Care Specialist MES is owned by Mrs. Longstreet, a qualified optometrist who is practicing from a consulting room situated in Uppington. Over and above providing test services, she also sells eyewear and frames to her customers. You visited her a month ago for an eye test and she was delighted to find out that you are a qualified accountant. She needed somebody to assist her in compiling her financial statements for the year ended 28 February 2019. You agreed to provide accounting services to her and received the following information of assets and liabilities for the financial years ended 28 February 2019 and 28 February 2018. Assets consisted of machinery and equipment at cost, accumulated depreciation on the machinery and equipment, inventory eyewear, trade debtors eyewear, things like glasses and all those kind of rubbish, trade debtors, bank and cash balances, and then the liabilities consisted out of a long-term loan and trade creditors. Mrs. Longstreet also provided you with the following additional information. They want you to do the statement of profit and loss. I do not see any income and expense items. Now, additional information, revenue is earned from two sources. The first one is the proceeds from the eyewear sales, and the second revenue stream is originated by fee income from the eye tests. So the eyewear, that's now the glasses and stuff that you're going to sell, that will be sales less cost of sales. But your income, your fee income that you're going to receive from the eye test, you're going to show as other operating income. The markup percentage on all eyewear is 50% on the cost of these eyewear items. All eyewear is purchased on credit by the entity. The outstanding amounts not covered by medical aid schemes have to be paid in cash by the customers when the eye test is performed. Before the specifications of the prescription glasses are sent to the lab, all amounts not covered by the medical aid schemes have to be settled in full by the customer. Now guys, you have to have this picture. I'm sure all of you have tested your eyes before. You go to the optometrist. If you belong to the medical aid, they work out how much the medical aid is going to cover. They work out how much you have to pay. Now, in this question, we made it simple. We said, well, there's either one or two choices. Either the medical aid is going to settle the bill, and if the medical aid is not going to settle the bill, you have to pay in cash. Right, now again, for what? For eyewear, because the medical aid also cover your glasses, the frames of your glasses, etc. But they also cover the eye test. So the medical aid, you can recover both the cost of the eyewear as well as the fee income out of the eye tests. And then again, if it was not covered by the medical aid, the customer has to pay for everything. Here we also say that there is no risk of the entity that they're not going to receive their money, because they will check with the medical aid when they perform the test whether they're going to cover the cost of the eyewear and the test. And if the answer is no, then the customer has to pay up front before anything is done, before the specifications are sent to the lab. The outstanding trade debtors consists of amounts that the medical aid schemes have to pay over to MES for services rendered to their members. Right, so at the end of last year, the medical aid scheme still hasn't settled 6,800. Hopefully they did so this year. And at the end of this year, there's an amount of 8,200 Rand that they haven't settled as yet. Monthly statements received from the medical aid schemes revealed that a total amount of 2.3 million Rand was received from them during the current financial year. Further analysis showed that 30% of the total amount recovered from the medical aid schemes was for the reimbursement of the eye tests. So 30% of that amount was for eye tests and 70% of the amount was for the reimbursement of eyewear, lenses, frames and glasses. Cash received from the customers who are not covered by the medical aid schemes amounted to 100,000 Rand for eye tests and 300,000 Rand for eyewear. So before we go further, let's just put this whole picture here then in perspective. What do we say? We say, well, we are going to receive from the medical aid. And what do we receive from the medical aid? We have received from the medical aid a total amount of 2.3 million Rand. Then we say, okay, well, good enough. 70% of that amount was for eyewear. And that amounts to 1,610,000. 1,610,000. And we say 30% of that amount was actually for tests. Eye tests that. And that amounted to 690,000. Good. Then we also say, well, simultaneously, we have received cash. So let's start here. Cash received from customers was in total 100,000 for tests. Let's do the eyewear first. 300,000. 300,000 for the eyewear. As well as 100,000 for the tests. Good. Now we've got that picture complete in our minds. And then we say, well, Mrs. Longstreet has two staff members, the receptionist and the cleaning lady. The total salary bill for the financial year was 560,000. 360,000 Rand of this amount is the total annual salary that Mrs. Longstreet pays herself on a monthly basis. And then the rest, the receptionist receives 150,000 and the cleaning lady 50,000 per annum. So immediately what we can gather here is that drawings for the year is going to be the amount that Mrs. Longstreet takes for herself, and that is a total of 360,000. And the rest must be salaries. So salaries being 200,000. Good. During the current financial year, MES purchased new machinery and equipment to the value of 380,000. MES paid cash rate after the proceeds of 160,000 Rand for machinery and equipment sold was used to partially fund the new acquisition. The carry value of the equipment sold at the date of the sale amounted to 140,000. So immediately, here we can see we had proceeds of 160,000, and then the carry value of the equipment sold at the date of the sale was 140,000. So immediately before, you haven't have to do any calculations, you will see that we have made a profit on the sale of 20,000. Now, if you go back to your list of balances, you have accumulated depreciation of 160,000 and then it increased to 190,000. So obviously, somewhere along the line, I have to work out my depreciation for the year because that has to be shown in our income statement. In order to do so, we're going to reconstruct our fixed assets, our machinery and equipment accounts. I'll show you that a little bit later. According to the rental contract signed by MES, they had to pay a monthly rent of R6,800 up to 1 January, when the rent increased by 6% according to the escalation clause. MES always pays the monthly rent on the last day of the previous month. Guys, no need for X's and Y's here. I know exactly what was the rent. It was R6,800 for 10 months. And then that's my expense for the first 10 months. And the last 2 months of the year was then equal to 6,800 multiplied by the 1.06, the escalation multiplied by 2 months. And that will give me my total rent for the year, which equals 82.46. Good. The long-term loan was taken out in 2017 to purchase new equipment. The repayment terms stipulate that biannually, i.e. twice a year, capital repayments of 17,500 rand. Only capital must be made on the 1st of May and the 1st of November of each year. The loan bears simple interest at 11% per annum, and interest payments are done on a monthly basis. Now, let's go and have a look at that calculation. The long-term loan year was originally, at the beginning of the year, the opening balance was 285,000, the closing balance being 250,000. So the opening balance, the 285,000, was from the 1st of March last year up to the 1st of May. And then they repaid 17,500. Then that was the outstanding amount up till the 1st of November. And then they repaid another 17,500. So if we look at the interest calculation, we said, well, our outstanding balance, 1st of May 2018 was 285,000 multiplied by 11%. The 1st of November was the first repayment. So from the 1st of, 1st of March, the 1st of May was the first repayment. So from 1 March to 1 May gives us 2 months. So for that period, there at the beginning, the first quarter, the amount of interest was 5,225. Then they repaid 17,500. So in the next quarter, the second last quarter of the year, from 1 May to 1 November, this was the second quarter of the year, from 1 May to 1 November, that outstanding balance was 267,500, the original 285,000, less the repayment of 17,500. That gives us an outstanding balance of 267,500. Multiplied by 11%, and from 1 May to 1 November equals 6 months. So that gives us 14,713 Rand worth of interest. And then our outstanding balance as at 1 November to 28 February 2019 was for a 4-month period at 11%, and the outstanding balance was at 267,500 less 17,500, 250,000, gives us 9,167 in total. Our total interest expense in the income statement, 29,104. Now guys, we have to do the income statement. We have a couple of figures already. So if we ask you to do the income statement, please go ahead and please do the layout of the income statement first. Mojo Eye Eng Specialist Statement of Profit and Loss for the year ended 28 February 2019. You know that you have 2 income streams. So you will have sales, and the sales will be for the eyewear. And then you're going to have as other operating income, your fee income, and that would be for the tests, the eye tests that you have performed. Now let's have a look at the sales. So how much money have we received for eyewear? We go back here to our little scheme that we have drawn here at the bottom. We said, well, that's easy. For eyewear, it was 1,610. And then for cash for eyewear was 300,000. So those two we have to add together. But please don't forget that we also have an opening balance. So what would have been included in the 2.3 million that we have received from the medical aid? We would have received the outstanding balance of last year from the medical aid of 6,800. That tells us that trade debtors only belong to the medical aid. So that is that 6,800. So included in this 2.3 million would have been that 6,800 of last year. But excluded, we still haven't received 8,200 Rand from the medical aid for eyewear and eye tests performed in the current financial period. So we also have to take cognizance of that fact and include the 8,200 Rand in our income statement, because we've earned that income in the current year, although it hasn't been received. So we are going to have 2.3 million of eyewear in total. This is the total amount received, so it's 70% of the 2.3 million, but also the 8,200 Rand we have to add because we have earned that money for this year, we just haven't received it, and we must deduct the 6,800 Rand because we've already recognized that income in the previous period. That was the outstanding balance at the beginning of the year. So the total income from eyewear from the medical aid would have been 70% of this total amount. The 2.3 million plus the amount they still owe at the end of the year, less the amount that actually belonged to previous year, which was included in the 2.3 million. And 70% of that is for the eyewear. That's not all. The cash customers also paid an amount of 300,000. So therefore eyewear, there was the 300,000. Now that then gives us total income for eyewear of 1,910,980. Now they told us here that our profit percentage on the markup percentage on all eyewear is 50% on the cost. So if we have, then it's 100 plus 50 equals 150. So if we want to work out cost of sales, it is then our sales figure 1,910,980 multiplied by 100 divided by 150, and that gives us gross profit for the year. The difference between sales and gross profit, not gross profit, cost of sales, the difference between sales and cost of sales will give us our gross profit for the year. So the 1,273,987 is our cost of sales figure. Now the fee income, exactly the same argument that we had there for the eyewear income, we're going to apply here for the fee income, because I said total amounts received from the medical aid schemes. 30% of that is for eye tests performed. So again, if we have received 2.3 million, I have to add back the amounts that I've earned this year, which is going to be included in my income statement, but simultaneously included in the 2.3 million was 6,800 Rand that belonged to the previous year, which I've already recognized in my income statement. So multiplied by 30% then, add to that is now the amount that we have received from our cash customers, and that was the 100,000 that we have to add in. Total fee income, 790,420. Profit on the sale of machinery, we've already recognized that. That is point number 3 here. Profit on the sale, 20,000, which is the difference between the 160,000 and the 140,000. Now, whilst we are on this subject of non-current assets, let's complete our non-current assets, because we said that we have to find out our depreciation charge for the year. Now, if we go back to the list of balances, we have the opening balance of machinery at cost. We have the closing balance of machinery at cost. So opening balance, machinery at cost, 1,220. Closing balance, machinery at cost, 1,380. We also have our accumulated depreciation, opening balance and closing balance. If we go to accumulated depreciation, opening balance and closing balance. In our question then, they also tell us that we have, over and above the machinery that we have sold, the current financial year, they have purchased new machinery and equipment to the value of 380,000 Rand. So that was the cost price of the new equipment. Now we can insert that in our cost account. So here on the debit side was bought for cash, bank 380,000, and now we have the closing balance. So what is going to be our balancing figure? The cost price of the assets that we have disposed of. That must have been 220,000 for this account to balance. Now, we have the opening balance and the closing balance of our accumulated depreciation account. They've told us in the question that the carry value of the equipment sold at the date of sale was 140,000. So if that was the case, and the cost price was 220,000, so 220,000 less than 140,000 would have given us the accumulated depreciation of the assets sold. 220 less the carry value was 140, so 220 less 80 gives me the 140,000 carry value. Now if I have the 80,000 and I balance off this account, I can say 80,000 plus 190,000 gives us 270,000. Opening balance 160,000, so that means that our balancing figure here is going to be our depreciation that we're actually looking for, and that is 110,000. So we can go to our income statement, depreciation 110,000, and there was our profit on the sale 20,000. Then we are done with that one. Here we've also worked out our rent expense for the year. Our rent expense for the year we said was the total amount of 29,104. So in our income statement, rent, that was interest. Our interest, 29,104. We also worked out the rent. The rent we said was 6,800 times 10 plus 6,800 times 1.06 for January and March. And in total, our rent was 82,416. That was that one, 82,416. Great. So we've done that one, we've done that one, we've done that one. Salaries, here we've said that our salaries for the year was 200,000, so there is the 200,000. Good. What else do the question gives us that we have to insert? Number 6 here, all other expenses are grouped under other operating expenses and should be reflected as a balancing figure. Oh my dear, what balancing figure? What are they talking about here? How can I go and determine that as a balancing figure? Guys, we can determine our profit for the year, can't we? Because what is assets less liabilities? Assets less liabilities equals equity. What is equity? Equity is my balance of my capital, opening balance of capital, plus any additional capital contributions during the year, less drawings plus profit equals our equity balance at the end of the year. Now, can't we work it out by some kind of magic? What was our equity in the beginning of the year and what was our equity at the end of the year? Yes, we can. Assets less liabilities. We have total assets, we've got total liabilities. The difference between those two will be our opening balance of our equity. The difference between these two for 2019 will be our closing balance for equity. So going to that calculation, we say, well, equity equals our opening balance, which is 1,510,000. That was my asset balance, less my liability balance, 303,200, and that gives me an opening balance of 1,206,800. I have to add profit to that, which I don't know what it is at this point of time. I also know what drawings is. Remember there with the salary story. They've told us that Mrs. Longstreet has taken 360,000 Rand as salary for the year. So that is my drawings for the year, 360,000. And my closing balance of equity, I know what that is. It is my total assets of 1,738,200 less my liabilities of 265,700 at the end of the year. So I have my closing balance. So my balancing figure then, 625,700, and that is my net profit for the year. It's the same calculation, just a little bit differently. 625,700. So I have this. So now if I'm reading that last point in my question, suddenly it starts to make sense. All other expenses are grouped under other operating expenses and should be reflected as a balancing figure. So coming back to my answer, I have everything here. I have my final profit figure. I can add everything together, what I have here. That one is the balancing figure. So then, therefore, to make this whole thing balance, I can work out what is the other operating expenses to actually derive at a net profit of 625,700. And that's the end of the question.